Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets, and more specifically, we're going to be zooming out here to the 3-day chart and taking a look at an impending death cross where we're going to see the 50 interval moving average cross here below the 200 interval moving average out here on the 3-day chart. And I've had literally dozens of people ask me to talk about this and ask my opinions on this because it seems to be a rather popular opinion in the cryptocurrency technical analysis community at the moment that this death cross is going to cause some more bearish price action to come into Bitcoin, and that perhaps we may even start breaking important levels of support like this uptrend right here that Bitcoin has been above for some time right here, or perhaps even allowing and causing us to break below $6,000. And because of that, because of the FUD that has brought, a lot of people have been curious and asking me what is the actual significance of this, and that's what we're going to be discussing in today's video. So without much further ado, let's go ahead and get right into it. But actually, before we get into it, I do want to go ahead and explain why I sound like death right now. That's probably because I feel like death. I do apologize that there wasn't a video yesterday. It was because I'm quite sick right now, and I just don't feel very well, and that's going to make this video perhaps a little bit more incoherent than normal videos. Hopefully we can power on through and do some TA anyway, guys. We got to keep the show going. Anyway, now actually, without much further ado, let's go ahead and do some short-term TA on Bitcoin, and then dive into the main point of today's video. Since there wasn't a video yesterday, I'm going to go ahead and do a little bit more short-term TA than I might normally do. What we've seen Bitcoin do here over the last week or so is Bitcoin ran up to around $6,540, and we pulled back a couple times and set a new low right down here, just under $6,300. If you go back on the channel, I was talking about how I was expecting Bitcoin to fall back down to levels of support in between this uptrend right here, very important uptrend. It's actually supposed to be somewhere around there, and about $6,300. I expected Bitcoin would garner support somewhere around there, and that's what seems to be happening at the moment. This death cross does kind of throw a wrench in the plan for Bitcoin to get a bounce here and either continue trading sideways or start moving up a little bit. I am going to be discussing that here in a second, although I'll give you guys a bit of a teaser. I really don't think it's as big a deal as people are making it out to be. Anyway, we did see Bitcoin have a nice little pullback down here and garner support again in the region of this uptrend right here. I'm very happy that we're still testing this uptrend of support, but also at the same time still holding it. It's a very important uptrend. It's not the end of the world if we break it. $6,000 breaking that might be a little bit worse, you might say, but it looks like for right now anyway, it looks like we're going to go ahead and hold that uptrend of support, which I'm quite happy to see happen. Anyway, with that out of the way, let's do the crypto market recap, and then we'll get into the main point of today's video. Bitcoin across all exchanges is currently trading at around $6,400 with a daily volume of 4,200 billion. $4.2 billion for people that speak English, and Bitcoin's up around 0.03% over the last 24 hours. Ethereum and XRP are both hovering around $20 billion in market capitalization. We've seen these two flipping a couple times this year where XRP has gotten above Ethereum, but for no longer than a day at any one time. XRP fans and XRP, I'm pretty sure XRP wants to be number 2 and is trying to get there, but Ethereum just won't let it have it, because whenever XRP comes up here and flippins Ethereum, it normally doesn't last very long. People go and buy a bunch of Ethereum or sell XRP. Anyway, Ethereum is down by about 0.16% over the last 24 hours, and XRP is up by about 0.19% over the last 24 hours. Nothing really to write home about there. Quite low volume on XRP. Ethereum's volume is looking rather healthy. If we sort by change over the last 24 hours, though, we're going to see MOAC and NIM are up by over 15%. Definitely a good day for them. I apologize that I can't think of any puns, but Veritasium is sitting down here at 100. That is the best YouTube channel that is listed here on CoinMarketCap anyway. Is down by about 11.71% over the last 24 hours and is currently trading around $31 at time of recording the video. Anyway, if we do sort by change over the last 24 hours here, we're going to see that the altcoin market is more red than it is green. Not exactly a great day for the altcoin market, but then again, we want to mainly focus on what's going on in the top 10, because those top 10 cryptocurrencies control something like 90% of market capitalization, and many of them are green. We do see about half of the top 10 altcoins and cryptocurrencies in the green, including Stellar, EOS, Cardano, and Monero. Anyway, guys, like I said at the beginning of the video, apologies if I'm a little bit more incoherent than I normally am. It happens. I apologize. Anyway, now let's go ahead and get on to the main point of today's video. Like I said, I had dozens, if probably more than dozens, many people asked me in the comment section of the last video that went up. I almost said yesterday's video. There wasn't a video yesterday. In the comment section of the last video that went up on the channel about this 3-day death cross that is coming up here on the chart. And it seems to be that a lot of people, especially the people that were mentioning it, of course, are quite concerned about this death cross and think it's going to bring a lot more bearish price action. Before we get into that, I want to go ahead and explain how I look at technical analysis and how I weight the significance of technical indicators, chart formations, and anything that has to do with the act of doing technical analysis. The way that I determine how strong an event on a chart is and how strong a technical indicator is not by the validity of the math. It's not by it's not even necessarily by how many times that kind of chart formation has predicted something in the past. What mainly concerns me when I'm looking at the strength and the validity of an actual technical event on the chart is how many people look at it. Okay, that's very important, because if no one looks at this indicator that has had a 100% accuracy rating in the past, if no one's looking at it and nobody's trading off of it, then that technical indicator has absolutely no significance, because all a market is, guys, is the manifestation of the traders in the market and how they feel about the market. So when we're moving up, obviously more people, or excuse me, more volume, more valuation in the market, I should say, is feeling bullish. And if we're moving down, more valuation in the market is feeling bearish and they want to sell or they want to short. And the same thing is true for technical indicators. Whenever you have a technical indicator, what I like to look at in technical indicators is not by how valid they are necessarily based on how many times they've been followed in the past. What I look at most is how many people are looking at the technical indicator, how much valuation in the space is looking at the technical indicator, and going to make trades based off of that technical indicator. Technical indicator times 5. I've just said that many times. My point on that, I can kind of explain this based on the different indicators I use here on the chart. You guys don't see me use indicators on the chart very often that are more niche. I use things like MACD, RSI, sometimes stochastic RSI, Bollinger Bands, moving averages, support and resistance levels, sometimes death crosses, but not very often, and I'll get to why that is in a second. But the main reason I don't use many more other technical indicators is simply because the more obscure the technical indicator, the less people that look at it and the less people that trade by it, and therefore the less powerful it is. Something like MACD is one of the most powerful technical indicators simply because of how many people make trades based off of it. So it's not that MACD has an amazing predictive power, it's that MACD it doesn't force people, but a lot of people make their trades based off of MACD. So it's like a self-fulfilling prophecy. Whenever we see some kind of bullish cross here coming on MACD, it's not that MACD is some magical indicator that can predict markets moving with 90% certainty. It's that whenever there's a bullish cross coming on MACD, most of the technical analysts see it and they say, okay, well, Bitcoin's going to start moving up from there. And then they put buy-side trades in and they start buying into the market and moving the market up from there. So why am I saying all this before I get into talking about the death cross? Well, there's a very good reason for that, and that's because the main reason that I look at certain technical indicators and the main reason that I don't look at others is because of how popular and how obscure they are. And the same thing happens for time intervals. Whenever people ask me, Jeb, what interval should I use? I always give them 3 main answers when they're looking to do day trading or intraday trading. I say look at the 1 hour, look at the 4 hour, and look at the daily chart. I don't tell them to look at the 3 hour chart. I don't tell them to look at the 2 hour. I don't tell them to look at the 45 minute. If they're doing long-term technical analysis, I'll say the week or the month, but I don't say look at the 2 week chart. And the reason for that is because no one else looks at them. And the same thing is true for the 3-day chart. While many technical analysts, like I said, guys, I'm sorry. While many technical analysts look at the 3-day chart, and many of them do use technical analysis on the 3-day chart, the vast majority of people that are doing technical analysis at all don't. And that's one of the reasons that I also don't use the log chart very often, is because most people are looking at the auto chart and they're looking at the daily chart. And that's why I use that combination so many times, because so many other people are making trades based off of it. So signals on this chart are more likely to have validity because other people are trading by them. Nobody looks at the 7-hour chart, and if they did, then sure, they may go and make trades based off of it, but more people are going to look at the 4-hour chart and make trades based off of what's happening on the 4-hour chart. So the 4-hour chart is more valid. And the reason that I'm bringing all this up is because the death cross that we're talking about here shows up on the 3-day chart. If this death cross showed up on the daily chart, it would be different. Not much. I'll get into why it's not in a second, but I'm just going to go ahead and tell you guys, I don't put hardly any validity at all in this 3-day death chart. 3-day death cross here on the 3-day chart. What we see here is we see the 50 interval simple moving average crossing below the 200 interval simple moving average here on the 3-day chart. But tell me honestly, guys, many technical analysts that are very good at technical analysis and they really know what they're doing will look at the 3-day chart. The 3-day chart is by no means an obscure chart like the 47-minute chart or whatever random interval. People do look at it, but many more people look at the 1-day chart, and the 1-day chart, in my opinion, is looking rather bullish right now. So the fact that the 3-day chart is much more obscure than something like the 1-day chart, the 4-hour chart, the 1-hour chart, the week chart, the month chart, charts like that, leads me to believe that this isn't going to have the kind of significance that it would have if it were on the daily chart, which really diminishes how important I think this death cross is. One thing to note, though, is that this has been given a lot of media attention by other YouTubers, and I think I've seen a couple of news sites talking about this as well. So with that in mind, that kind of brings back some of that validity, because it's kind of starting to spread FUD in the market. People are thinking, oh, well, the market's going to go down because there's a 3-day death cross happening. I might as well go ahead and short and sell right now. So there is some sell side pressure coming from that, because so many people have been alerted to it by the media in cryptocurrency. So you have to keep that in mind. That is important. But as far as the actual technical analysts that aren't on YouTube or on other technical analysis news websites, for example, they're probably either not going to see this, and if they do, I don't think they're going to give it much validity because it's on the 3-day chart. And with that said, even if this death cross were coming on the daily chart, I still wouldn't put that much validity on it, and that's because I really don't put much validity in death crosses at all, guys. I do put some. Sometimes death crosses are important, and a lot of times, not a lot of times, sometimes they do have predictive power, but many times I think whenever you see something happen with a death cross, it's corollary rather than causal. Let me give you an example of that. Right over here, the 50 interval simple moving average on the 3-day crossed below the 100 interval simple moving average right over here. That's also that's also what's known as a death cross, because a short-term moving average is crossing below a long-term moving average. And take a look at where it happened. It happened right there at the bottom of the downtrend. Right here, we were very close to the bottom of the downtrend, and Bitcoin just a couple weeks later, only about a week and a half later, started moving up from there. Is a death cross now a bullish sign? I don't think so. That's not really what a death cross is meant to mean right over here. We're about to see another death cross over here. Whether or not it's going to be major is something to, we'll see. One thing that we did just recently see is we saw the 20 interval simple moving average cross below the 200 daily simple moving average. And that's still another sign of a death cross. That hasn't happened all year. That just happened for the first time all year. As you can see, that had not happened yet. We finally saw it happen where a short-term moving average, a very short-term moving average, crossed below a very long-term moving average. That's also an example of a death cross. Now, I will give it to you. Most people, when they're talking about death crosses, they're talking about the 50 and the 200 or the 50 and the 100, but it's still a death cross. And we didn't really see a lot of major price action right here. We did see a little bit of red, I'll give you that, but I really don't think that had a lot to do with it, because we saw some other fundamental news coming in right here. I don't think this little red candlestick had anything to do with this death cross right here. And the same thing is true if you go out to the daily chart. And this is why, guys, a lot of times crosses do mean something. I'm not discounting that. A lot of times they do mean something. Something like the 50 and the 200 crossing typically is important, but it's not the only technical analysis you want to look at. Let's look over here at the time when the 50 daily simple moving average crossed below the 200 daily simple moving average here on the daily chart. Guess where it happened? It happened right over here. And this is on the daily chart, remember. So whatever happens on the daily chart, in my opinion anyway, is going to have much larger ramifications on the market than what happens on the 3-day chart. And take a look at where this happened. Happened right in here. We did see a red candlestick. We saw a red candlestick. We can't really determine whether or not that had anything to do with this death cross, but let's say it did anyway. Well, okay, so we saw a red candlestick. We traded sideways for a few days, and then we went on a rally for about a 33-40%. We saw Bitcoin rally just a week and a half afterwards, 50%. Just a little while after this supposed death cross, and I remember back here, everybody was freaking out about this impending death cross, and sure, we saw a red candlestick sometime around there. It wasn't the end of the world, guys. I can go on for hours showing you guys death crosses that didn't really mean a whole lot. Look at this cross over here. The 50 daily simple moving average crossed below the 100 daily simple moving average. That's another example of a death cross. And what did we see? We saw that happen in the middle of an uptrend right here. And the same day it happened, Bitcoin rallied a couple percent right there. We saw Bitcoin rally. Let's see what that was. That was about 10%. The same day that Bitcoin had a death cross with the 50 daily simple moving average below the 100 daily simple moving average, we saw Bitcoin rally about 10%. So guys, like I said, I want to make it very clear. I'm not discounting the significance of moving averages crossing. If you go back and you look at some videos on the channel, you're going to see that sometimes I talk about the significance of them when we're over here and looking at the beginning of the bull market, where we saw a lot of these moving averages cross in a certain way. But my point is, and specifically when the market crosses them, I'm not discounting that. I am, however, discounting it when it's on the 3-day chart and when death crosses so far this year in the bear market, when the market was far more bearish, by the way. Over here in the beginning of the market, in the beginning of the bear market, when we saw the market was far more bearish back over here than it currently is now, we saw some death crosses on the daily chart, which is a far more important chart than the 3-daily, in my opinion, and we still didn't see major bearish price action come out of the same type of death cross, but on a more popular and more used interval like the daily chart. So tell me in the comments section down below what you think is going to happen here. If we see some kind of major bearish price action movement come in the next week or so, I don't think it's going to be because of that death cross on the 3-day. If we do see one, I expect that it would be corollary and not causal. We very well may see one, guys. guys, I can't see into the future, but I don't think we're going to see one, Bitcoin break this uptrend of support, and two, I don't think even if we did, we'd come all the way down to $6,000, and three, I really don't think it would happen because of a death cross on the obscure interval that is the 3 daily. And like I said, I want to make this clear. The 3 daily interval is used by a lot of technical analysts, but the vast majority of people that are doing TA in the market aren't going to take something like the death cross on the 3 daily chart as the be all and end all of the technical analysis that they should be following. Like I said, tell me in the comment section down below what you guys think of that TA. Do you think the 3 daily interval death cross is going to bring much newer lows to Bitcoin, or do you think it really just doesn't mean all that much and it's not that big a deal? I'm interested, as always, to hear your opinions in the comment section down below. If you guys are interested in joining the Cryptocurrency Technical Analysis Academy, where you can learn how to do technical analysis on cryptocurrency, if you could believe that, there's a link to check out what we have to offer in the description down below. I'm very happy with the product, and within the next week or so, I am going to be releasing 5 new videos. As you can tell, I am a little sickly, and I don't really want to record the last couple of videos that I need to add to that new batch that I'm going to be releasing until my voice clears up a little bit, so that the release of that batch of new videos may be delayed a couple of days, guys. I do want to get that out within the next week or so. Hopefully by the I was going to plan on launching it on November the 16th because that's the 1-year anniversary of the first video that went up on the channel, but it may have to be a couple of days after that at this rate because of the whole congested thing. Anyway, guys, I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.